Okay, I did a video before on the countries that the OECD had put on the gray list and also the blacklist. And what I wanted to do today is tell you what the problem is in that country, because if you have an offshore jurisdiction that you're dealing with right now and you've bought an offshore corporation from that jurisdiction, you can have nightmare problems that you need to know how to divvy around this, the problems that you're going to come up with. I'm not saying don't go in these jurisdictions, but I'm telling you they do have some advantages, believe me or not, okay? Because some of these blacklisted countries have no filing requirements. Now, again, as I mentioned in my last video, if you're a U.S. citizen or U.S. resident, or you break the substantial presence test of the U.S., you're in the U.S. too long, whether you're a resident or citizen, okay, you could pay taxes on your worldwide income, and this can affect you. The only way I'm telling you this won't affect you if you're a U.S. citizen or a U.S. resident. In other words, you would have to break your residency ties and your citizenship ties to the U.S., and then don't break the substantial presence test whether you're in the U.S. too long during the year, where you're going to have to pay taxes on your worldwide income. If you're living in a country that taxes worldwide income, like places like Chile, places like Canada, tons of places where you have to be outside that country long enough. Colombia is another one. A lot of people are getting residency in Colombia. Mexico's another one. Mexico's very strict on taxes, folks. You get residency there, you're going to have to pay taxes on your worldwide income if you're there long enough, okay? And if you're trying to get the passport there, I don't know if any way you're going to do it without being there long enough to try to qualify for the citizenship. But if you're going to these places and you haven't relinquished your U.S. citizenship and you're living in these high tax countries like Mexico or Colombia or whatever that taxes worldwide income, you're going to have to break away long enough to detax yourself from those countries and to where you're not having to pay taxes legally there, okay? Now, the Council of the European Union, they've underlined the importance of promoting and strengthening tax good governance standards, including the area of fair taxation and tax transparency, and of fighting against tax fraud, evasion, and avoidance, both of the EU level and globally. Now, notice they didn't mention anything about money laundering, drug trafficking. This is a tax issue, folks, okay? And what the OECD is wanting to do is they want to basically break the arm of these countries that are trying to keep their taxes down low. Remember, they're saying this is tax evasion. Well, they're people that are living in territorial tax systems or living in pure tax havens that are obligated. They're not having to pay taxes on their worldwide income. Yet these countries, they're getting corporations in, they're changing their tax laws to where these people, they're living in pure tax havens and are living in territorial tax countries that go and set these corporate structures up. Now they got to pay taxes. This is a tax trap. The OECD is forcing you to pay taxes in these jurisdictions that you don't have to by law because of where you live. It's because of where you buy these offshore corporations from. Now, so this is, they think everybody that goes into these entities are tax evading, okay? And they're putting all kinds of pressure on these countries to basically cut back on their bread and butter. Belize, as I told you before on our last podcast that I put, I was telling you, Belize caved in. They did everything the OECD stated, and they came out with filing taxes on offshore corporations, and the OECD temporarily took them off the blacklist. Now they've thrown them back on. Why? They come up with new requirements. They say, hey, we want you to do this, this, and this now, okay? Well, yes, master, I'll do that, okay? This is what happens. Every time they comply, they just come out with something new, okay? And this is what happens, and eventually what happens is if they don't comply, they'll cut off visa-free travel to that country. Like now, Belize doesn't have visa-free to the Schengen countries, but a lot of these countries do in Central America. Most of the countries in Central America have visa-free to the Schengen countries. So if they don't comply with this on their offshore corporations, they'll just cut off visa-free travel to the Schengen countries, and they'll cut off all tourist travel, or not just tourist travel, but all travel that comes to that country. Oh, there's a matter of tons of things. They can come in and say, hey, we won't let any of your corporations be set up in any of our countries. Okay, this is, and in other regions too. I'm just telling you some of the things they can do. So a lot of these countries have no choice but to cave in. Now, there are countries that are not caving in. And I'm going to tell you some of those countries today. They have flat out, they just are not bending, okay? And there are some advantages dealing with these countries, and there's some disadvantages. It can cause you a lot of headaches, but then at the same time, these countries, some of them I'm going to mention, they're just not going to comply. They're not going to have any reporting requirements, or they're not going to have any sort of requirements that you have to do to file that offshore corporation. Now, again, like I told you before, if you're from a high tax country, just because they have these rules doesn't mean that you fall in that category, okay? You fall in that category where they're giving you good non-filing requirements in their laws, but that's only if you're not a U.S. citizen, if you're not from a country that taxes highly on worldwide income, if you're a resident of that high tax country and you haven't broken your tax ties, okay? But if you're in that situation where you have broken those tax ties, you're not a U.S. citizen, you're not a U.S. resident anymore, you haven't broken the substantial presence test in the U.S., then these countries have offered really, they are basically saying, hey, we're not going to change the tax laws for our offshore corporations. We're absolutely not going to have filing requirements, okay? Most of them have caved in, okay? 2 of the countries have not. And 2 of them are Palau and also Samoa, okay? Now, let me go through some other things here. The OECD now stated they appreciate the work of the Code of Conduct Group and its chairs for their contribution in fulfilling the mandate and objectives as reflected in the Code of Conduct on business taxation, the Code of Conduct group over the last 25 years. Now, they also mentioned here that they appreciate the continuous productive cooperation on tax matters between the Code of Conduct group and most jurisdictions around the world. They went on to say that they welcome the progress in the relevant jurisdictions through the active steps taken by the agreed deadlines and the new commitments taken towards resolving the deficiencies that the Code of Conduct group had identified. Now, the problem is once they go by this, then they come out with other regs and they just throw them right back on the blacklist again. Now, they also went on to say that regrets that some jurisdictions were downgraded by the Global Forum in relation to their rating on exchange of information on request, or were not able to address the identified deficiencies. They usually give them a certain period of time. If they don't do it, they'll throw them on this blacklist. They also want to say that regrets that some jurisdictions remain non-cooperative for tax purposes, and that a number of jurisdictions fail to fulfill their commitments to the Code of Conduct group with regard to economic substance requirements under Criterion 2.2, on the reform of the of harmful tax regimes under Criterion 2.1, and they invite these jurisdictions to engage in the Code of Conduct group in order to resolve the remaining issues. All right, now, they went on to say that they regretted that Turkey has not made any progress with one member state on the effective automatic exchange of information. They went on to reiterate its calls on Turkey to begin the outstanding automatic information exchange relationship with one member state and to fully comply with the requirements set in the conclusions of the ECONFIN Council of 22nd of February 2021, and then October the 5th, 2021, and then 24th of February 2022. Now, I'm going to go through, and then they mention here too that they approved accordingly the revised EU list of non-cooperative jurisdictions for tax purposes. And I'm going to give you the countries and why they're having problems now, okay? Now, they endorsed the state of play set out in Annex 2 with respect to commitments taken by the cooperative jurisdictions to implement tax and governing standards, okay? Now, these are the countries here. The EU list of non-cooperative jurisdictions for tax purposes American Samoa. Here's a American Overseas Territory on this list, okay? Now, American Samoa, this is the problem they don't like about American Samoa, okay? American Samoa does not apply any automatic exchange of financial information, has not signed and ratified, including through the jurisdiction they are dependent on the OECD Mutual Convention on Mutual Administration Assistance is amended, and has not committed to applying the minimum standards on base erosion and profit shifting. And they went on to say, and has not committed to addressing these issues. Okay, now this is one jurisdiction you might want to look at. Okay, now I have people on here that says, Tom, you're advising us to go to these countries. I'm not giving you any advice. I'm giving you samples of countries that are not complying with the OECD. If you want to do it, that's up to you. Okay, but this is the key right here. Going to these jurisdictions, as I'm going to tell you again, I've told you before, doesn't excuse your tax obligations in these countries where you're supposed to report the taxes here anyway. I'm just stating that it's neat because these countries have said, hey, we're not giving in, okay? So if you're not from these high tax countries, you're not a U.S. citizen, you're not a U.S. resident, this might be a great thing for you, okay? But don't take these companies from these jurisdictions and try to do business in places like in Europe, in places like Singapore, because you're going to have, especially with brokerage accounts, you're going to have problems with most of those places, okay? And if you don't have a problem, just give it time. You'll finally get a notice that says we're not taking any more Belize corporations. You got 60 days to move your account, okay? Or 6 months to move the account or whatever, okay? Now, some of the banks will do this. When they cut your ties, they'll say, hey, we've decided we're not dealing. They'll give you a list of all the countries that they're not doing business with anymore, okay? Loads of these jurisdictions have done this, okay? I've seen it over and over again. And we've had tons of clients that have come back, what do we do on this? And we basically give them alternatives, okay? But what happens is when they get these notices, some cases they'll say you don't have to move your money, but you can't trade. We'll only let you sell. You can't buy any more equities. You can't do anything as far as buying. You can either keep it as it is, or you're going to have to move the account. You can sell it, okay? That's all you can do. A lot of them are giving you time periods, and you're going to have to move the account. Now, why would you use this? I'll tell you how you would use this. If you go in and you want to have a commercial account, and you're in a situation, you're not from these countries that have high taxes, okay, that have filing requirements, you're living in a country that has that doesn't tax income overseas, like Panama and other jurisdictions, you have gotten out of your U.S. citizenship, okay, you didn't go back in the U.S. as a U.S. resident, you're not one of these high tax countries that taxes worldwide income by living there, and now you qualify to create your own little your tax havens based on where you structure your business. These are the type of people that should be going here. Why? There is no filing requirements that these companies are making you do in that country. Okay, I mean that's nice. Okay, you don't have anything you got to do. Just pay a fee once a year. Now, again, that could change because if they twist their arm hard enough and they break it from the OECD, these countries could cave in. I'm just telling you what it is today. Hey, listen, tomorrow is a different day. Okay. Now, these countries, some of them that I've told you about, they've pushed and pushed and pushed, and they're saying right now they're not compliant. Okay. So again, this would be a great idea for someone who has gotten away from these countries that I've just mentioned that you would have to pay high taxes on. Okay. But again, don't set brokerage accounts up where you're buying equities in places like in Europe, in other jurisdictions like in Singapore, because you're going to have a headache. Some places are still taking these jurisdictions. I know as a fact, but I'm telling you, it's usually from newer brokerage companies that they're wanting more business right off the bat, and they're wanting to build their base. But the older the bank or brokerage company is, the least likely they're going to comply with this. If they're letting you do it now, they're going to break ties with it later, and they're going to cause you a headache. You're going to have to move the account. There are places that you can set up the accounts in Central America. Only use this for a commercial account, okay? And for that purposes, then if you want to go in a brokerage account, you can wire the funds out from there, and you can do it through yourself. You'd have to move the money within that bank, and that bank's going to have to be able to do internal transfers with the same entity's name. And a lot of brokerage companies and banks now have stopped doing that. Some still doing it though. So, I mean, we show you how to do this. Okay. It's all legal, but again, we don't do this for showing anybody how to get around illegal taxes. We do it because there's people that legally don't have to pay taxes. They have to go through all kinds of headaches having to file forms when they really don't have to. Okay. But if they pick a jurisdiction that requires them to do it, to file those forms, like if Samoa all of a sudden changes their tax laws and they come out and say, hey, we're going to start making these corporations file, then you can switch to another entity that's not doing that. Okay. I think you're always going to see countries that are going to, you're always going to have countries out there that will say, hey, we're going to buck the trend. We're not requiring our offshore corporations to file. But again, that doesn't excuse you from not filing. You have to look at your own tax laws in your own country. All right, let's look at some other countries. Let's look at, American Samoa doesn't apply any automatic exchange of financial information. It's not signed and ratified, including through the jurisdiction. They are dependent on the OECD Multilateral Convention on Mutual Administration Assistance, is amended and has not committed to applying the minimum standards on base erosion and profit shifting. Anguilla is the second country. Anguilla has not doesn't have a rating of at least largely compliant by the Global Forum for Exchange of Information on Request. Anguilla also facilitates offshore structures and arrangements aimed at attracting profits without real economic substance by failing to take all necessary actions to ensure the effective implementation of substance requirements under Criterion 2.2. All right, the third one is Antigua and Barbuda. Now, if you get citizenship here in Antigua and Barbuda and then you move there, okay, you can have a real problem, okay? In fact, it could be a real headache. It has nothing to do with you getting their offshore corporations because you're living in that country now, okay? And Antigua and Barbuda have a lot to lose by not giving in because they still have visa-free travel to the Schengen countries. It's a big, big tourist place, and they don't want to lose it. So you could easily see Antigua come off this list, okay? So anyway, Antigua and Barbuda does not have a rating of at least largely compliant by the Global Forum for Exchange of Information on Request. Number 4 is Bahamas. Bahamas facilitates offshore structures and arrangements aimed at attracting profits without real economic substance by failing to take all necessary actions to ensure the effective implementation of substance requirements under Criterion 2.2. Now, Belize. Belize is one I mentioned to you before, came off the blacklist. Now they're putting it back on it. Okay. Belize does not have a rating of at least largely compliant by the Global Forum for Exchange of Information Request. They also want to say that Belize also committed to address the Global Forum recommendation for regard to automatic exchange of information in due time so as to achieve determinations of at least in place but needs improvement on core requirements 1 and 2 of the Global Forum peer review report in the autumn of 2024. Fiji's the next one. Okay, now Fiji is number 6. They went on to say this is why they're not, while they put Fiji and all these other ones again on the blacklist, is Fiji's not a member of the Global Forum. See, they want you to be a member of their membership, okay? If you don't, man, they just take you and they break your arm, okay? They want all their slaves to do exactly what they want them to do. And a lot of them end up basically caving in. And they cave in because of all this problems that you can have. Now, Fiji would probably be less affected than a place like Belize because Fiji is so far away. But there are other countries that can cut the ties too. Australia can cut off all their ties. New Zealand also to Fiji, which is a lot closer to this island. Now, Fiji's not a member of the Global Forum. They want to say has not signed and ratified the OECD Multilateral Convention or Mutual Administration Assistance as amended, has harmful preferential tax regimes, exporting companies, income communication technology, ITC incentive, concessionary rate of tax for regional or global headquarters, has not become a member of the inclusive framework, nor implemented the BEPS minimum standards, and has not resolved these issues yet. All right, Guam. Okay, now this is the one I told you earlier. This one and Palau have probably been the worst as far as the OECD goes, okay? This is number 7 on the list. Guam does not apply any, listen to this, any automatic exchange of financial information, has not signed and ratified, including through the jurisdiction. They are dependent on the OECD Multilateral Convention on Mutual Administrative Assistance as amended, has not committed to apply the BEPS minimum standards, and is not committed to addressing these issues. Now, Guam, again, I mentioned to you before, they don't have any requirements. It's the only one that I have seen, and I haven't checked with Palau lately, but I think Palau is the same way, where you really don't have any. Palau, I'm not sure on. I'm going to check on that, but because some things could have come out since this came out. I know that Guam has not. Guam has absolutely, it's like Belize was 15 years ago, absolutely no file forms you have to file as of right now, okay? Now, they went on to say that Guam does not apply any automatic exchange of financial information, has not signed and ratified, including through the jurisdiction. They are dependent on the OECD Multilateral Convention and Mutual Administrative Assistance as amended, has not committed to apply the BEPS minimum standards, is not committed to addressing these issues. Palau's number 8. Palau is the same way, does not apply any automatic exchange of information, has not signed and ratified the OECD Multilateral Convention on Mutual Assistance as amended, and has not resolved these issues yet. These 2 that I mentioned probably have not complied the most. Now, again, am I telling you to go these? No, I'm just telling you these are the laws. You have to make the decision whether you want to pick a country that has absolutely no filing requirements on the corporation structure, but also these are the ones that are going to be more than likely the OECD is going to be hitting on the most, okay? Now, are there ways around dealing with these issues? Yeah, I mean, there are ways that you can do it. And I've got other videos I've put out on this. You can look at those on that, dealing with this. But, you know, it's going to be like a merry-go-round because, you know, when you get off your, this changes constantly. I mean, it's something you have to stay on top of all the time, okay? And you could see this totally change with Samoa and Palau in 8 months from now. I mean, I don't know. If you look at our channels, we'll keep you up to date with this. All right, Panama, let's look at it. Now, Panama does not have a rating of at least largely compliant by the Global Forum for Exchange of Information on Request, has a harmful foreign source income exemption regime, and has not resolved these issues yet. Russian Federation is another one. The Russian Federation has a harmful preferential tax regime. International holding companies has not resolved this issue. Now, Samoa, they talked about here, has a harmful preferential tax regime, offshore business, and has not resolved this yet. Seychelles is another one. Now, Seychelles, let me give you an example. Seychelles, they started having all kinds of compliance issues. This happened last year, okay? They came out with this. They're not requiring people to file tax returns, but you've got to turn all your contracts in that you have with your providers. You got to do this with your registered agent. You have to turn in boatloads of stuff on bank statements. They haven't, as of yet, required you to do the tax returns, but there's all kinds of filing requirements you're going to have to do, okay? So if you're willing to do all that, but look what good it did them. Didn't do them any good. They're thrown back on the blacklist, okay? They're going to comply with this, okay, and probably come out with a tax return that make you file each year. And you're from a jurisdiction maybe that doesn't require to pay taxes, but you got to do it because now this jurisdiction's making you do it. Okay. And this is the problem that you run into. Now, and not just file the tax return, because there are jurisdictions like Belize that has that you have to file tax returns, but you don't have to pay taxes on holding companies that hold just strictly investments that don't do business with the public. Okay. Seychelles is making you file these. It doesn't make any difference if it's a holding company or a commercial account, or you're using it strictly for commercial business. It doesn't make any difference. You still have to turn these reports, and it's a lot of stuff, man. Contracts and everything you got with people that you're doing business with, if it's commercial business that you're doing. All right, Trinidad and Tobago is another one. But anyway, on the Seychelles, they talked about here too before I hit Trinidad and Tobago. They said that Seychelles does not have a rating of at least largely compliant by the global form of exchange of information on request. It sounds like they gave in a lot of stuff, and now they're coming back and they're just throwing them back on the blacklist again. Now, Trinidad and Tobago is another one. Now, Trinidad and Tobago does not have a rating of at least largely compliant by the global form for exchange of information on request, and has not signed and ratified the OECD multilateral convention or mutual administration assistance as amended, has harmful preferential tax regimes. When they put here preferential tax regimes, they got free zones. Now, isn't that something? This is what they evidently, it says here, preferential tax regimes, they got free zones, and then does not implement the BEPS minimum standard on country by country reporting, has not resolved these issues yet. I wonder if they're going to go after Dubai. Dubai has tons of these free zones. Are they going to go after them because people are taking these free zones and starting their business there, and they found a way to legally get around high income taxes? I mean, this is the type of crap they're coming out with. I don't see them doing this to Dubai. Dubai's not on this list. The UAE, which Dubai's part of, they're not on this list. They've been on these lists before, but I don't see them now. They've got free zones all over the place. And free zones, right now, you can avoid the taxes they've come out with if you have a free zone company, that corporate tax they've got now. Okay. UAE's not on this list. Okay. And they went on to say here that Trinidad and Tobago has also committed in addressing global forum recommendation as regard to automatic exchange of information criterion in due time as to the achieved determination of at least in place, but needs improvement on core requirements 1 and 2 in the global forum peer review report in the autumn of 2024. Turks and Caicos now is on the blacklist. Okay. Now, Turks and Caicos Islands facilitates offshore structures and arrangements aimed at attracting profits without real economic substance by failing to take all necessary actions to ensure the effective implementation of substance requirements under Criterion 2.2. U.S. Virgin Islands, now they got the U.S. overseas territories thrown on this. Now, the U.S. Virgin Islands does not apply any automatic exchange of financial information, has not signed and ratified, including through the jurisdiction. They are dependent on the OECD Multilateral Convention on Mutual Administrative Assistance as amended, has harmful preferential tax regimes, economic development, program exempt companies, International Banking Center Regulatory Act, has not committed to apply the BEPS minimum standards, is not committed to addressing these issues. Now, if you're a U.S. citizen, the American Virgin Islands has a real good tax laws there. Okay, so this is an option you want to look at because good tax laws, and now they're not having to release information. Now, most of the tourist travel the American Virgin Islands is having is coming from the U.S. too, and places around there. I'm sure people from Europe go there too, but they're pretty much standing their ground. So if you're a U.S. citizen, U.S. resident, this is a place too you could consider if you want ultimate privacy, and you don't want stuff turned over to the OECD. Now, these OECD countries that are requesting this. Now, Vanuatu is another one, number 16. Vanuatu facilitates offshore structures and arrangements aimed at attracting profits without real economic substance and has not resolved this issue yet. Now, Vanuatu is waiting for a supplementary review by the Global Forum in relation to exchange of information on request. Now, they went on to say here that talking about transparency, that the following jurisdictions is expected to effectively exchange information with all 27 member states according to the timeline referred in paragraph 6 of the Council. Conclusions of, they want to talk about paragraphs and all this stuff, and they were talking about Turkey, for instance. The following jurisdictions committed address the Global Forum recommendations with regard to automatic exchange of information in due time, so as to achieve determination of at least in place but needs improvement on core requirements. And anyway, Turkey was one of them here, and they went on to say that the following jurisdictions are waiting for supplemental review by the Global Forum, and that is Botswana, British Virgin Islands, and Dominica. Now, St. Kitts and Nevis is not on this list. They're on the gray list, they're on the black list, and you can virtually live in St. Kitts. There is no income tax here, no capital gains tax, no estate tax, no inheritance tax, and it's not on this list. Now, why is St. Kitts not on this list? Well, St. Kitts does have a very high corporate tax rate, okay? Now, it's 33%. I've had some people do YouTube videos that says there's no taxation on corporations in St. Kitts, and that's totally wrong, okay? It's a 33% tax on local corporations, and it doesn't make any difference if it's a limited company, same tax, okay? Now they're taxing offshore corporations if the controlling person or entity that controls that corporation is centered in Nevis or St. Kitts. If you're living outside, they're following requirements, but you don't have to pay the tax on income that's generated as of right now, okay? But the great thing about St. Kitts and Nevis, they've got great tax laws, and they're not on this list. So that's something you ought to consider because you won't have a lot of the headaches and crap that you're going to have dealing with countries like this. Now, can you live here, okay, and not have to pay taxes? If you do the things that I've told you before, you've broken away, if you're a U.S. citizen, you've broken away as being a U.S. citizen, U.S. resident, you're broken away your tax ties from that country that taxes worldwide income. You're living here in St. Kitts, and you don't have a local St. Kitts company because you can set up what's called an unincorporated business. Here's a 4% business tax after an exemption is taken. You subtract the exemption, and then you pay 4% on that. Or you can set up an offshore company like, for instance, Guam or Samoa. Samoa would be a better choice. And then you have no filing requirements in St. Kitts because that company is outside of St. Kitts. And then you go by the laws of Samoa, okay? And whatever those laws are, right now they're real good. They might give in, who knows? I'm just giving you examples and combinations of things you can do. But the thing I like about St. Kitts and Nevis is not on the blacklist. That's the great thing about it. And then I can show you how to go about dealing with places like, Palau, Samoa, things like this. Anyway, folks, they went on to say that the following jurisdictions which are committed in amending or abolishing their harmful foreign source income exemption regimes by the end of 2022 and demonstrated tangible progress with these reforms in 2022 were granted until the end of 2023 to adapt their legislation as regards to the treatment of capital gains, and that was Hong Kong and Malaysia. The following jurisdictions committed to amending and abolishing preferential tax regimes in the scope of the formal harmful tax practices by the 31st of December 2023 is Albania on industrial incentives, Armenia, free economic zones and information technology projects, and Eswatini, special economic zones. Anyway, folks, if you want to know more of this, I could go on this all day long with these countries, but if you want to know more of this, go to our website, www.citizenshipquickly.com, and just ask for some help. And I would like to hear from you. If you got any questions, just put them below. And again, don't forget to hit the subscribe button at the right of your screen right here. If you want new videos automatically, if you want to legally get around high income taxes, how to get a second passport as quick as 4 to 8 months, we'll show you how to do that. And I look forward to talking to you on the next video. Take care.